Welcome to Big4accountingfirms.com podcast, brought to you by Big4accountingfirms.com. Just wanted to let you guys know that our site has moved from www.thebig4accountingfirms.com to just Big4accountingfirms.com. So make sure to check that out, Big4accountingfirms.com. Today we're going to be going over some news that came out last week. News came out on March 2nd of 2017 that Caterpillar was raided by several government agencies, including the IRS. Caterpillar had 3 of its buildings in Illinois raided by 3 federal agencies on March 2nd, 2017. The departments conducting the raid were the Internal Revenue Service, the Federal Deposit Insurance Corp, and the U.S. Department of Commerce. Now, it's assumed that the reason for the raid was Caterpillar's offshore tax practices, and this is because of an investigation that was conducted by Congress in 2014, and Caterpillar was in the news back then for their offshore tax practices. Now, what are we going to discuss today? We're going to discuss what Caterpillar stated about the raid, some facts about Caterpillar's current tax position, why we think this happened, if the raid of Caterpillar by the government is justified, and what is PwC's involvement. Now, this caps was already one of the worst weeks for PwC because of the whole Oscars fiasco. And then now one of their prominent clients, Caterpillar, was raided because of tax practices that PwC advised upon. We'll have more on that later. First, let's talk about Caterpillar's statement about the raids. Caterpillar's statement on their website said that law enforcement authorities entered 3 Peoria area Caterpillar Inc. facilities, including the corporate headquarters, to execute a search and seizure warrant. The warrant is focused on the collection of documents and electronic information. Caterpillar is cooperating with law enforcement. While the warrant is broadly drafted, we believe the execution of the search warrant is regarding, among other things, export filings that relate to CSARL matter, first disclosed in Caterpillar's Form 10-K, filed on February 17, 2015, and updated in Caterpillar's most recent Form 10-K filing. Now, the disclosure that they're talking about in their 10-K is a tax-related disclosure where it says, on January 30th, 2015, we received a revenue agent's report from the Internal Revenue Service indicating the end of a field examination of our U.S. tax returns for 2007 to 2009, including the impact of loss carried back to 2005. The RAR proposed tax increases and penalties for these years of approximately $1 billion, primarily related to 2 significant areas that we intend to vigorously contest through the IRS appeals process. In the first area, the IRS has proposed to tax in the United States profits earned from certain parts of transactions by one of our non-U.S. subsidiaries, Caterpillar SARL or CSARL. So that's essentially what they said. And they talked about the press release of how they're cooperating, and then they referenced the 10-K. And the 10-K statement was about the tax implications of this overseas entity that's in Switzerland. Now let's go over Caterpillar's past investigation. Caterpillar was investigated in 2014 by Congress for their use of Switzerland as a tax haven. And the main reason this came to light was because of a whistleblower who tried to whistleblow on Caterpillar. He was an executive of the company. He tried to bring the issue up internally of this tax haven being used, and it doesn't have any substance. And then that didn't work, so he ended up suing the company, and the company ended up settling with him for an undisclosed amount. And that's really how that 2014 congressional investigation got started, because of that. Now, what is Caterpillar's position as far as tax goes? Theoretically, if they have this tax haven, they should be seeing a humongous benefit, and it should be glaring. But if you look at their 10K, their tax rates aren't very low, especially in 2016. And that's one of the reasons why I'm questioning this investigation, because their tax rates are pretty high compared to other companies that have more aggressive tax positions. In 2016, they had an effective tax rate of 138%. In 2015, they had a tax rate of about 27%. In 2014, 22%. Those are pretty high tax rates relative to other large multinational corporations. For example, let's look at Facebook for comparison. Facebook's most recent effective tax rate is down at 18%. Because of their foreign operations, or at least that's the disclosure in their effective tax rate, is this favorable benefit from foreign operations. And now Facebook is a much larger corporation than Caterpillar. Caterpillar has a market cap of about $50 billion, while Facebook is somewhere up in almost near $400 billion of market cap. And let's look at one of the other largest companies in the world, Google. Google's effective tax rate for the past 3 years was 21% in 2016, 17% in 2015, and 19% in 2014. Now, like I said, these companies are much bigger than Caterpillar and earn a lot more money than Caterpillar. But the government chose to go after Caterpillar instead of these companies, instead of challenging these companies and raiding their offices. Let's also look at Caterpillar's income taxes paid. The amount of taxes that Caterpillar paid are as follows. In 2016, it's estimated that they're going to pay $623 million. In 2015, they paid about $1.2 billion in taxes. In 2014, they paid $1.6 billion in taxes. As you can see, Caterpillar is paying billions in taxes. So it doesn't make too much sense here why IRS is barking up this tree so hard. The one thing that might make sense about why they're being investigated now is that Trump recently aligned himself with Caterpillar. He said he likes Caterpillar and that he wants to use Caterpillar to help build his border wall. This is also a good time for the government to seize on PwC's weakness if they want to get a settlement out of PwC, because PwC's perception is very bad because of the Oscars. So that might be another reason for the timing of this investigation. Now, what immediately preceded this investigation as well was a shareholder lawsuit. PwC and Caterpillar are both being sued by a Caterpillar shareholder, and the shareholder alleges that PwC and Caterpillar executives knowingly caused Caterpillar to engage in improper, illegal, and possibly criminal conduct spanning more than a dozen years. Now, what is PwC's involvement in all of this? Well, PwC is Caterpillar's independent auditor. They're also Caterpillar's tax advisor for the transaction in question. And so what that means is that PwC consulted Caterpillar in relocating these operations in Switzerland. For this consulting, Caterpillar allegedly paid PwC over $50 million. If you look in Caterpillar's 10K, you do see large tax fees going out across these years. Now, in the last few years, they haven't been paying large tax fees, so they haven't been paid to PwC or other advisors to continue this tax haven approach. And another thing is the Congress is pretty upset that PwC was providing this advice, even though that, and the reason they're pretty upset was because it made PwC look as if they weren't independent. But a lot of this consulting happened before Sarbanes-Oxley, and Congress is barely looking at it now. So it's not really fair to hold PwC in 1999 to the same standards as today. And PwC no longer provides material advice to Caterpillar like they did in 1999 and 2000. This has huge implications for PwC if they receive sanctions because of their consulting on this tax haven advice. If they are found guilty of setting up this tax haven for Caterpillar that ultimately proves to be a sham, then they could face some extremely harsh punishment, similar to what KPMG faced when they were sanctioned by the government for setting up their tax havens. So it's going to be really interesting to see where PwC comes out on this. PwC has a lot of problematic things going on right now. They have the Oscars fiasco, which tarnished their brand severely, and they have the MF Global lawsuit, which is billions of dollars, and they just settled their Taylor Beaton lawsuit as well. So they're really managing perception here, and they can't really afford to have a tax sanction right now. They can't have a client have to pay back billions of dollars to the government based on their advice. That would be very bad for their perception and would really weaken their brand. And just have a few concluding remarks here. I think the timing of this Caterpillar raid is very weird. Caterpillar is truly an American company. They did this tax transaction without a doubt, but this type of transaction is very common in large corporations now. You can't be a tax director of a Fortune 500 company and say, I want to pay 35% tax in US. You have to look at all your options. If you have an international play or an international reorg that you are capable of doing, you have to do it. If you say, I'm going to pay 35% in the US, you'll be fired if you're a tax director of a public company. That's just the way it is. So I think it's good that Congress is interested in evening the playing field, that Congress and the IRS are interested in evening the playing field, but Caterpillar is in the right place to start because Caterpillar is a manufacturing company with primarily located in the US. If they want to go after somebody, they should start going after the financial institutions that engage in these types of transactions in spades, and it's billions of dollars, not like hundreds of millions of dollars or just a couple billion. This multiples of billions of dollars over many years, and it's ongoing. If you look at the effective tax rate for Caterpillar, it doesn't look like this is ongoing anymore. And that's why I really question the timing of this investigation. Right after Trump came out and said he likes Caterpillar and he wants to use them, I find it kind of odd. And I find it kind of odd that it immediately follows PwC's Oscar fiasco too. It seems like somebody gave the go because of the weakness of both companies. And that's another thing that Caterpillar stated in their statement, that the warrants weren't really specific. It was just these blanket warrants. This seems like a headline grab for some congressperson that Caterpillar wrong. Caterpillar must have taken some jobs out of some congressional district and upset somebody to where they're trying to pressure the IRS, or to where they're trying to pressure the IRS to move on this sooner and these other departments to get involved as well. And if I were the lawyers for PwC or Caterpillar, I'd try to investigate why this raid happened now, because if you investigate that, I feel like you'll find some misconduct. The timing just seems too curious for me. It's just a huge coincidence that all this is happening right now. I understand that Caterpillar might have engaged in what some might call a weak tax position by moving part of its business to Switzerland, but why is the investigation happening right now as opposed to right after the congressional hearing in 2014 or some other time? I feel like it should have happened sooner because that's when it was relevant. As to now, where it looks like they're paying billions of dollars in taxes, why do you want to punish a taxpayer now? All you're going to do is punish shareholders for something that happened over 10 years ago. It just doesn't make sense to me. That's all we have for today. Remember to check out our new website, big4accountingfirms.com. Also remember that if you need help with recruiting at the Big Four, we have a book available on Amazon, The Big Four Accounting Firms Recruiting Guide. Thanks again for listening.